My death is getting closer. We supposed to always grow. Every day that we get older, see my son is getting big. In his future, I wanna see. So them things that used to bother me, no longer gonna bother me. Future for my little man, some of y'all can't understand it. I'm just living life, maybe not the way that God had planned it, but every day I pray for the Lord's mercy and grace. And when I'm old and gray, maybe He'll open up some gates.
All right. Happy Friday. Happy Friday. So I haven't done an Ask the Trader in a while, but the market fell really hard on Tuesday. And when the market falls like that, your traders come into the market and they want to try to figure out how you can benefit on the market going down. So I always tell people this, when you're shorting the market, or buying puts, you're betting on the market going down in value, but traders, investors shouldn't be shorting the market. Shorting the market is a trading tool, okay? So if you want quick money, if you want to make money on the market going down in value, then shorting or buying puts might be the way to go. But you have to technically know what's going on when you're shorting the market, and that's the problem that a lot of newbies have when they come into the market. So to get an idea of how you're able to short in the market, because people say it all the time, Joel, how can you make money on the market going down in value? Like, that makes no sense whatsoever. In any other industry, you can't make money when things go down. How are you able to make money when the market is going down? So I always tell people to think of the market like, think of the market like I wouldn't say gambling, but let's say you're at a sporting event, and let's say the Pittsburgh Steelers are playing the Atlanta Falcons, right? And let's say you're gambling, right? And you have a $10 bet. So you bet your friend, you might be a Falcon fan, your friend might be a Pittsburgh fan. And you guys put $10 on the line. You'll say, you know what? If the Falcons win, I'll place a $10 bet. In that particular situation, somebody's going to win and somebody's going to lose. Somebody's going to win and somebody's going to lose, right? When you're shorting the market, what you're doing is you're taking the money from people that are losing. So let's say I bought Apple, right, at $100 a share, and Apple drops $10, right? I needed $100 to buy a share. Let's say at 12 o'clock, Apple's share price was $100. Well, I need $100. But let's say by 1 o'clock, that $100 share price drops to 90. Well, if I bought it for $100 and now it's 90, I'm losing $10. Well, here's the interesting thing. People think that money just goes poof and be gone. No, when you lose money, somebody else is making money, right? So that $10 that I lost or that I'm down, a person that's shorting the market is going to gain those $10. And then it's the opposite also. So if you are shorting the market, or if you are buying puts, if the market starts to go up in price, you're going to start losing. Why? Because the people that you're betting against are going to start winning. And it's actually that easy when you think about it. So what you're actually doing, the advanced part of it, the reason that you're able to do it is because you're going to borrow shares from somebody. So let's say I got 100,000 shares of Apple, and I want to lend them out to somebody, right, that wants to bet on it going down. Well, the reason why that person is making a whole bunch of money is because they're like, look, don't even think of it as shares. Think of it like a car, right? Let's say I had a Corvette and I'm going on vacation. And I say, you know what? You can borrow this Corvette. You can do whatever you want to do with this Corvette. But I need my Corvette back in 10 days. So you say, you know what? You bought that vet for $80,000, right? All you want me to do is return that vet at the same price, right? So then I'm like, yeah. So then what you do is you borrow the vet from me. You try to find somebody. Let's say you borrowed the vet from me for $50,000. So, you're driving that Corvette. you now have possession of this Corvette that's $50,000. What you're going to do is you're going to try to find somebody that can buy that vet from you for $40,000. Why? Because if I can get somebody to, if I can get somebody to buy it at a lower price, all I have to do is return the vet the way that it is, right? So I have this vet, I'm borrowing it. I didn't have to, I'm borrowing this vet. I go out, I find somebody that's willing to pay $40,000 for it. They pay $40,000 for it. I make a $10,000 difference, and then I return the vet, right? That's essentially what you're doing. You're buying back shares, and that you're borrowing shares, but you got to return those shares at a certain time. And if that share price is higher, you still got to return that vet. Let's say you can't find anybody that can buy it for $40 or $30 or $20,000, right? And now the vets are going for 60 or 70 or 80, and then you have to return that vet back. Well, then once you return that vet back for a higher price, you got to return the vet, and you got to pay on top of that, which is what you're losing. So that's the advanced part of it. But you don't need to know all of that, because if you're on your platform, all you got to do is hit a button that says sell, and then that means you can short or hit buy if you want that stock to go up in value. So I do consultations all the time. So if you're interested in figuring out how to do it, I'm gonna show right around 12 o'clock. I'm gonna go live, and I'm gonna show you guys how to short the market for free, right? And I'm gonna show you guys how to buy puts on that same trade and what to look for, because a lot of people think that you have to think differently. All you have to do is think the opposite. Instead of thinking of things going up in value, all you're going to do is be thinking about things going down in value. But it's trading, right? I get a lot of investors that come into the market, and they're trying to short something for like a couple of years. And I always tell people that when you're shorting the market always goes down faster than it goes up. We always say that, you take the stairs up, but then you take the elevator down in the stock market. When the stock market falls, it falls really, really fast, just like it did on Tuesday. On Tuesday, the market fell like 2 or 3%. Sometimes it takes a whole week for the market to go up 2 or 3%, and it did it in a day. So anytime the market falls, short sellers like to come in, make really, really fast money, and then get out. The problem that newbies make is they come into the market, and then they try to buy a put the same way that they buy calls 7, 8, 9 months out. And then they're trying to figure out why they're losing money, because it's a trade. When I'm shorting the market, I'm usually in and out the same day, in and out in the next couple of days. I don't really get into the habit of shorting more than 2 or 3 days. And I'm an advanced trader that knows what he's doing. So make sure that when you're shorting, A, you know what you're doing. B, make sure it's a trade and not an investment. So I know some people that can short for years, right? But I'm not talking to those advanced traders that's been doing this, for years. I'm talking about you newbies that are coming into the market. Because if you're day trading, or if you're scalping the market, which is getting in and out of the market the same day, you shouldn't really have a bias of up or down. Now, I'm not going to say you shouldn't have a bias. I love things to go up in value. I'm usually going to the upside versus going to the downside. But you need to have a neutral bias when you're entering the market, so that you won't try to trade like on a Tuesday. So on Tuesday, once I looked at the Ichimoku, once I saw the heat map and I saw that everything was down, I knew that the bias was down. So you could have done one or two things. You could have traded the market to the downside that whole day, or you could have gone out to the golf range or gone out to the gym and worked out, right? So you could do, one or two things. If you don't like shorting, then stay out of the market that day. All right. But you guys got to be able to see it when it happens. Like, it was clear as day that the market was going to drop that day. And a lot of you guys just didn't have any idea that it was going to happen. So, A, it's probably because you're not using the correct indicators to see what's happening in real time. And B, you're probably using the wrong charts, which is what I always try to teach in all of my webinars. I do have webinar week coming October, I believe the 12th through the 14th. So the link is out, so you can go ahead and sign up for it. I had to do it the 12th through the 14th because I got jury duty for the next 2 weeks starting on Monday. So if you're trying to book a consultation, you're not going to be able to book a consultation with me unless it's a Saturday or a Sunday, and a Sunday before 1 o'clock before football comes on, because I got to go to jury duty for 2 weeks. Hopefully they won't pick me to be on the stand. Not to be on the stand, but to be part of the jury. So hopefully I won't have to be there for 2 weeks. But I am on call for 2 weeks for jury duty. All right. So I suspended consultations. I am doing them on the weekend. I got a couple that I'm doing tomorrow and a couple that I'm doing on Sunday. And then people are already booking that Saturday and Sunday as well. So if you are booking a consultation, people don't know how to do it. You got to go to my What Would Joe Do page, go through Messenger, and then try to give me some times that are available for you. All right. So that's shorting. Shorting is a trading technique, and I'll show you guys how to do it. When Ask the Trader is over with. So let me look at some of you guys' questions. This is Ask the Trader. I do have a focus on the market going down and a focus on trading the market as it goes down. So, I'm trying to keep it within that. But if you have any other questions that you want me to answer for the next hour, go ahead and type them in the chat section, and I'll try to get to everybody's questions. So, I see good morning, moderators and everyone. Good morning. Good afternoon, wherever you're from. I do consultations from all over. We got cats from Germany, Russia, Hawaii that are on these calls all the time. Oh, okay. Someone said that laser was a stellar put to buy this week. So you guys might want to go out. I'll probably look at laser during the Charts with Joel session. Now, there is a difference between Ask the Trader and Charts with Joel. In Ask the Trader, you ask me questions about the market, all right, about stock, about my position, any question that you want regarding the stock market. During Charts with Joel, I'll answer questions, but most of the questions that I'll answer for you generally is about a stock and a time frame, and I'm pretty much analyzing those particular stocks using the technical side. So this is kind of like the fundamental side, and then I'll also give you guys the technical side, which a lot of you guys struggle with. If you learn the technical side of the market, I promise y'all, it's like the Matrix. Everything becomes really, really simple. You'll know when to buy. You'll know when to get out. All right, so one of the questions that just came in was, I've been buying stock for a couple of years, but I'm ready to start trading. Where do I start? Well, the first place to start, I always tell people, is to, of course, take my courses, right? Or attend Webinar Week. I love all of my traders, my beginner traders and advanced traders, to start with my Webinar Week, because I break the market down in its most fundamental, basic way. And it's a way that pretty much a lot of teachers aren't teaching. And I have a theory behind why that's happening, right? I've been in the market for over 10 years, right? So I've been in the market for over a decade. When a trader first comes into the market, even if you have a PhD or a master's or whatever, and you're educated, doctorate, and you come into the market, you're smart. We all, and a lot of us are smart. We all are college educated or high school educated, and we're educated. We come into the market, we believe that we can buy and sell stocks off of common sense. And even the people that come into the market, just like I did when I first came into the market, I started out as a trader, thinking that I was investing. And what I realized is that, just like in the NBA, just like in any other sport, you can't come into the league being a one-trick pony. You just can't. You can't come into the league only knowing how to shoot the three-pointer. Because everybody can shoot the three-pointer now. Centers shoot the three-pointer. Coaches show their players how to shoot the three-pointer, right? Everybody can shoot the three. So unless you can come into the NBA and you got defense, offense, right, you can shoot the three, you can dunk, you're probably not going to make it into the NBA. I say the same thing as far as investing and trading. You can't just come into the market trying to trade daily. You should be investing, trading, and swing trading, because most of you guys don't even have the skill of investing. There's a totally different strategy at buying something like cryptocurrency than it is with Apple or with Tesla, right? There's three different strategies that you should be going about those three different asset classes, and a lot of you guys don't know how to approach it. But if you had an overall game, which is what I teach during webinar week, I teach you how to invest, I teach you how to look at the technicals, and then I teach you how to day trade, because at some point in your life, you're going to probably retire, or you're going to inherit a whole bunch of money. And when you have those funds, you're not going to know how to generate income from it. Most of us will just go to somebody and say, all right, I want to invest in a business. Can you show me how to do it? The stock market is the building blocks of all business. I've been telling people this for years. It's the building blocks of all business. Any business owner, any restaurant owner, any person that wants to develop some type of business, you should start in the stock market by understanding how it fundamentally works, because everything that we invest in every day are all the products that we consume on an everyday basis. So understanding the basics of the market is going to help you be a better trader. It's going to help you be a better investor, and it's going to also help you be a better business-minded individual. And by me being in the stock, like I was in real estate, right? I was in real estate for a long time. And I thought that I knew everything when I was in real estate, and that wasn't the case. I only knew Atlanta real estate, right? I knew a specific area and time and, and place. And then when the stock market fell, I didn't know what to do. Once you start understanding the stock market globally, internationally, then you start to understand how things work, right? You start to say, all right, if I want to open up a restaurant business, let me see how restaurants are doing globally. Let me see how the largest restaurant chains are doing right now, because if McDonald's and, Chipotle are struggling, what makes me think that I'm going to do well in this environment if the best of the best is struggling? And then if they're not struggling, what are these restaurants doing, that are keeping them afloat? And maybe I need to adopt a lot of what they're doing into what my restaurant is doing. And see, a lot of you guys don't do that. You feel like you're smart. You think you know everything. So you come into the game trying to open up these different businesses, and you could be learning from the best of the best. These companies that generate billions and billions of dollars, they're teaching you what to do. And some of you guys are so thick-headed, you don't even understand it. I always tell people all the time, before you even open up a restaurant, let's say you got a line of credit and you got $100,000. Throw that $100,000 into something like Darden, right? Darden is the owner of like the Red Lobsters and the Olive Gardens, right? Let that 100,000 make about a 40 or 50% return, right? That 100,000 turn into about 150. And now you're working with pure profits, so that when you open up that business, you're not struggling as much. Or as you're developing that restaurant business, take some of the funds that you're making and reinvest it into other restaurant chains around you that are better than you. All right? Invest in the McDonald's, invest in the Chipotle's, the Wingstops, the Shake Shacks, as your restaurant starts to develop. You guys don't think that way. So I know that was a lot, but the moral of the story is, where should you start? Have a consultation with me. I'm going to hear your story. I'm going to listen to what you want to do. I'm an entrepreneur. I got several businesses in different industries, right? I've grown accounts from zero to a lot of money, right? So, I want you guys to start talking to people that are experienced. Man, you guys go out there. I see you guys. I put out a post this week, and I'm going to stop doing that, but because I don't really like hating on cats, but in this particular situation, I just had to, because I'm just like, guys, like, for real, it's getting ridiculous right now. It's getting ridiculous at who you guys are paying money to educate you on things, right? And it's just weird to me seeing it. People that are anointed at being the greatest at particular things, and they might have only been in the market, for a couple of years. And I'm like, yo, give some people some time to see if they're great. Even when LeBron, before he came into the NBA, they anointed him the king, but he had to show what he can do first, right? Then he got a couple of rings, and then people were like, all right, you are the king. Because Michael Jordan, if y'all remember, tried to anoint Kwame Brown as being the greatest. He came into the market, he came into the game and flopped, right? So you can't just anoint people just because you want to, right? I want you guys to start vetting the people that are educating you. Like, show me some receipts. What have you done? Like, give me some testimonials. Like, are you true to what you're saying that you're doing? Because a lot of people are leading you astray because they think that they're smart. And being smart is not how you make it into this game. Yes, you got to be smart, but you also got to be able to understand the infrastructure and how this stuff works. I got cats that are taking investment advice from people that don't even have investments, never invested ever. And they're sitting there with millions of dollars like, what should I buy now? And how long should I be in it? And it's because you guys are not vetting the people that you're talking to. You just see that they have a YouTube video and they got a bunch of followers, and that's the vetting that you guys do. And then when you lose money or the strategies that you learn are not sound, then you want to blame, I don't know. Anyway, just vet the people that you're looking at, that you're taking courses from, even if they're not from me. I give out free videos every Friday, so you can watch every single. You can go to my YouTube video. You can go to my YouTube, which is like What Would Joe Do? It's not that hard to find me. WhatWouldJoeDo.com or What Would Joe Do on YouTube, right? So you can find me at What Would Joe Do on Facebook. Just Google me. You'll be able to find me. But I have free videos all the time because I want you guys to get the fundamentals. I'm tired of not being able to talk about the 200-day moving average with you guys. Like the 200-day moving average, guys, it's the most basic of the basics of the basics. You can't even turn on CNBC or Bloomberg and understand what you're seeing there if you don't know what a 200-day moving average is. Another thing is market cap. Y'all have no idea how much the stocks you guys are buying. You don't know how much it's worth. Like, y'all see the stock price. Like y'all come to me all the time, and I did it. Everything that I'm telling you guys that I'm looking all crazy about is the same exact thing I did because I didn't have anybody that could teach me. But you guys are buying stocks depending on how many shares you can buy. Like, I'm not going to buy that stock. It's $1,000. I'm going to buy this stock because it's $4 and I can buy 200 shares of it. That's not how you buy stock. That's not what makes you a lot of money. You guys got to know how big that company is and how much it can grow. That's where you make your money. You don't make your money from the stock price. I keep telling y'all that it's an illusion. It's an illusion it's an illusion to get you newbies into stuff not knowing how big it is. Apple is the best at it. Apple is the largest company on the planet. It's not going to make you rich. Sorry. I know people are like, what? Joel, you tell people to buy Apple all the time. I didn't say it's not going to make you 10 or 20% a year. It's not going to make you rich. It's not that stock that you're going to buy one day and then 12 months later, it's up 1,000%. Apple has already grown so big, it can't grow no more. And how they fool you, and I don't want the Apple haters to come because I love Apple. It's one of my most cherished investments. I think about 10% of my portfolio is sitting in Apple because I know it's stable and I know I can earn or generate 10 or 20%. But the days of making 100, 200, 400% on Apple is over with. And you guys are thinking, but Joel, it's only $150 a share. They fooled you. They fooled you. Apple has done a reverse stock split, I think 2 or 3 times. Apple's real stock price is supposed to be like Amazon's, like $6,000 or $7,000 a share. And I'm just throwing a number out there. But what they do is they revert. What they do is you make money on Apple growing in value. So let's say Apple only had 1 share. And Apple right now is a $2 trillion company. That means to buy the whole company is going to cost you $2 trillion. So what they did was they broke up Apple into a million pieces so that everybody can invest in it. But those million pieces are going to grow in value as Apple starts to grow in value too. So what do? When the pieces get too big, then they chop those pieces up. And then when that gets too big, they chop those pieces up so that it looks like that $100 share is small. It's affordable. I can buy that. I can buy 10 shares of Apple. Why buy 1 share of Amazon when I can buy 30 shares of Apple? Not knowing that Apple is the largest company on the planet. It's this big. Y'all should be buying companies that are this big. Even if the stock price is $1,000 a share. Why? Because you make your money on things growing, not the share price. Y'all killing me with that. Now, I did learn about market cap probably within the first 6 to 12 months of me learning the stock game. So I learned real early what to look for. And I never cared about share price. I could give a damn about a share price. It could be $10,000 a share. Because I can, with stuff like with Robinhood and Square, you can go in there and you can pick whatever price you want for your stock. If I want Amazon to be $100 a share, I only got $100. I can buy $100 worth of Amazon. So what that you can buy 1 share and it's $3,000 and I only own $100 worth of it. The next day, if Amazon is up 10%, my $100 is going to be up $10, and whoever owns $3,000 worth of it is going to be up $300, right? Because you make your money on the growth of a company, not the share price. All right, quit buying things because of the share price. All right, it's an illusion. What I want you guys to start doing is saying, what is the market cap? What is the market cap? All right, I want to make sure that I'm still on. Hold on. Says that I'm live still. Hold on. Because it looks like it froze. If it didn't freeze, comment for me. I know I don't have anybody working for me. All right, cool. All right, we'll keep it moving. All right, so let's do the next question. All right, the next question is, okay, the questions are coming in. Hold on. Let me go all the way back. All right. How long do you think the market will be in a downtrend? Very good question. All right, look, the market drops. I want to tell people this. The market drops 5 to 10% every single solitary year. 5 to 10% every single solitary year. What you guys are experiencing right now is normal. We love when the market drops 5% because we call that buying the dip. All right, stocks stair step going up. They don't go up in a straight line. So how do you figure out where it can go? Well, you got to be able to look at charts because I don't know what 10% is. All right. So I got to know what the highs are, right? You guys can do it in real estate. You guys can do it when you're going out and look for a car, but you guys can't do it when you're buying your stock. You could tell me right now, what were the highs for your real estate? 400,000? Well, what's 10% off 400,000? 40,000. All right. So that means when houses drop to 360,000, they're 10% off. You guys need to do the same thing for stocks. So if you're trying to figure out the best time to buy these things, you go and you look at the highs. You say, all right, where are the highs are? You calculate 5 to 10% off of that. You look at the trajectory, and then it kind of gives you an idea about how long it will take. Now, September has always been the worst month of the year for stocks historically. Like, you can go back and look at the statistics. I've been telling people For the last 2 months since May, I said, guys, be careful. When September comes, a lot of y'all are going to get killed. Some people listened, some people didn't, right? They didn't vet me. They didn't look back at my history and say, what was Joel talking about last September? What was Joel talking about, September 4 years ago? It's the same thing. All right. So we're expecting the market to fall. It fell. I thought the market was going to fall about 10%. I'm not going to be 100% right, but I kind of knew that it was going to fall. It's now down 5%. Everybody's looking for about another 5% correction, but we're going into October. So this is what I tell people. Watch the market. If you're interested in getting into the market, look for some stock that are already down at their 200-day moving average. I think Amazon was one that I looked at the other day. There's a couple of stocks that are already there. Start picking away at some of the investments that you want. Even if you want to take some options, start picking at some of those options. Go about 6 months out. Once we start going into October, what we're going to try to do is see how low it can go in October. So I don't know how low it can go, but I know after October going into November, we got the Christmas rally that usually happens. Now, November, December are usually some of the best months of the stock market, right? It sells off in September, October, and in May. And then, people hedge funds, pension funds start picking up stocks again right around October, November, so that we can get that Christmas rally. And that rally usually lasts all the way up until about April. It's been the same cycle every year. And it's usually tech stocks. Why? Because tech stocks make most of their money during the Christmas period, right? That's when people buy the most, in September, that's when Apple releases their new products, their new phones. They're the largest company on the planet. So everybody's watching Apple to see where the market can actually go. Retail companies are going to sell a whole bunch of products. Apple's going to sell a whole bunch of products. Amazon's going to make a whole bunch of money because they're delivering all of these products, right? So those are the types of companies. Microsoft is going to make money, right? Because of Xboxes, web services, and what have you, right? So a lot of people love investing in the tech sector to try to make money through the February, March, April period. Then cyclically, we get out of the tech stocks. We start buying the traveling stocks. That's why the traveling stocks did well during the summer. I know a lot of you guys just think that they went up just to be going up. No. Oil goes up in the summer. Why? Because people travel, right? Oil companies, airlines, Carnival cruises, hotel chains, they're going to all do well during the summertime, right? Because people are traveling. They can take their prices up, right? And then right around the fall, when people start to go back to school, you're going to see those stocks come in, which they're doing right now, and you're going to start seeing it rotate back into the tech stocks. Now, the tech stocks sold off really, really hard during this particular period. So a lot of us are trying to hold off on it. And tech stocks are also selling off because they think that if rates go up, if interest rates go up, it's supposedly going to affect your tech stocks. So you got a couple of things going on where a lot of people are spooked at buying the market. So hopefully that made a lot of sense. Take some of what I'm saying, go do your due diligence, go on YouTube, see if what I'm saying is aligning up with the charts that you're looking at before you decide to make a decision. All right. Next question. I've been buying we already saw that one. What made you add to Roku and I believe Moderna? Oh, all right. So just recently I added Roku to so if you don't know this, if you go and go to the search tab and you type in WWJD, which is what would Joe do index, you'll see the 50 companies that I'm invested in. Usually it's like maybe 40 of the 50 because I usually change out 5 or 10. But for the most part, you're going to see 40 of my core companies that I'm investing in. Well, lately I took out Peloton and I sold something else. I sold Ferrari, which was race. So I sold Ferrari. I made some money on that. I sold Peloton, which I didn't make any money on. And then I added Roku and I added Moderna. Now, why did I do that? Well, because Moderna is becoming like that company as far as vaccines. It's like the number one company. It's the smallest out of all the big companies. And remember, you make your money on the growth of a company, not the share price going up. The share price goes up because of the growth of the company, right? I've seen stocks that can go from $1,000 a share to $10,000 a share, right? So stop looking at the share price and start looking at the market cap. Well, Moderna is smaller than the Pfizer's, right? It's smaller than the Merck's, right? So the smaller a company is, if they're one of the leaders in providing vaccines, then those are the types of companies you want to buy. So if you want to know what my favorite vaccine stocks are, it's Novavax and Moderna. Okay, those are the only two that I look at. Those are the only two that I recommend. And Moderna has made you guys a lot of money, especially in the options market. I also added Roku. Why did I add Roku? Because Roku is the #1 streaming device that's out there. And now that Roku is attaching themselves to everybody, you can buy a Roku device and have access to all of these other providers. You know, if you're using Comcast or if you're using, Disney Plus, or if you're using Netflix, right? You're going to be able to use all of that using the Roku device. Roku devices are sold mostly during the Christmas period. So I decided, because Roku had fallen in price a lot, and we're now approaching the Christmas season, that this was the time to kind of get my investment in. And I've been watching it for a while. So those were the reasons why I bought Roku and Moderna. Someone said that Merck has come out with a new COVID pill and will seek emergency FDA approval. Should we begin looking at investing? Great. We just, we're talking about vaccine stocks. First thing you want to look for, and I haven't looked at it yet. I'll do it during the Charts with Joel session. You want to look and see how big Merck is in comparison with the Modernas and the Pfizer's, right? Because it's going to tell us how big it can grow. Then we want to look at the beta. We want to see how how Merck has been doing, with at least within the last year, to kind of give us realistic expectations on how much it can grow. Then once we figure that out, then we can kind of figure out our own growth rate on it, right? So if we look back and we saw that Merck grew 100% in the last year, and they got good news and it has good beta, and it's a small company that can grow, I'm going to start telling you guys to buy Merck. If Merck is already at its all-time highs, it's one of the largest companies that are out there, it has a really low beta, then I'm going to say you can buy it, but we're going to wait until it touches either the 50-day moving average or the 200-day moving average, okay? So those are different scenarios that I would have to come into play before I buy it, because fundamentally I understand why you guys want to buy it. But fundamentals are not the only reason that a stock can go up. You guys got to understand. Y'all got to understand this. When a company is fundamentally good, that doesn't mean that it's necessarily going to go up in price, because investors are who make the market go up in value. Investors, we buy so that that company can grow. We buy the stock price up so that that company can reinvest in its own company, in its own shares as it goes up, and they can use those funds to grow in value, and so that they can buy other companies so that the company can grow and grow and grow. They need capital from us. I don't think you guys understand that when you're buying. I think a lot of you guys are like, they're going to make a whole bunch of money, therefore I'm going to make a whole bunch of money in my share price. That's not how it works, okay? The world wanted Tesla to be the #1 car company on the planet. It had nothing to do with how much money they made. Y'all heard what I just said? The world wanted Tesla to be the #1 and largest car company on the planet for a reason. Why? Because investors said, we're tired of the Fords and the General Motors and the Toyotas and the Hondas being stagnant with with technology. The world needs to change as far as cars. So because y'all ain't going to do it, we're going to put our money into this company, this small company that has the technology to change the world. So investors kept investing in Tesla until they became profitable. Y'all know Tesla didn't even become profitable until 2019. That's when they had their first profitable year. You could have invested in Tesla from 2014 all the way to 2019. For 5 years, they never made any money. You know another company that did that? Amazon. Amazon did not make money the first 10 years that it was out. Y'all hear what I just said? The first 10 years that Amazon was out, it didn't make any money. But investors believed in it. They believed that it can change the world. So we kept investing in it so that it can grow in value, so that you can make money on the growth. And then once it became more profitable, then you had other companies and other countries start investing in Amazon and making it grow even more. That's what's happening in Tesla. That's now what's happening into every car company that's involved with electric cars. The investors have spoken. They said, look, if your car company ain't providing electric cars, you ain't getting no money. So Ford was forced to come out with an electric car. General Motors was forced to come out with an electric car. Volvo was forced to go all electric. Okay? And that's what investors do. And that's how you make money in the market. Okay? All right. You don't see the October webinar week out there to book yet? Go to the search tab and just type in webinar week. It should pop up. I'll give you guys another link so that you guys can sign up. All right. If you're a day trader, not an investor, all that matters is what the chart is saying. That is totally true. Y'all better listen. Though there are gems in the comment section as well. All right. You got to look and see what the charts are doing. The charts are the polygraph. You heard what I just said? Charts tell you the truth. Charts don't lie. People do. You can see people lie all the time. They come out, you should buy this. It's going to make you this. Charts don't lie. If a stock is going up, it's because money is flowing into it. When a stock is going down, I don't care how great the news is, the stock is going down in value. You guys gotta become chartists, and I don't want to hear the excuses about I don't have time. I don't have time to do this, Joe. Well, then you don't have time to make money. Because I teach charts to fifth graders, and they can read a chart in 1 minute and tell you everything about the company. If it's bullish, if it's bearish, how, in the last year, how much was it up? What were the 52-week lows? What were the 52-week highs? On average, about how much money can I make in the next year if I invest in this company? They can do that in 1 minute, and they have fun doing it. So if you have a kid, and you're trying to educate them on the market, I have a video for that, right? Called Mission Impossible. And it's for all newbies. I even have parents that take it with their kids, and they're like, Joe, you should sell this to the parents too. All right, so it's called Mission Impossible Kids, Parents, and Teens. If you're a newbie, you need to watch that video. It's going to explain to you the fundamentals of the market, the stuff that we weren't taught when we were young. And we weren't taught because our parents were just ignorant. We weren't taught this because the technology wasn't around. Shoot, computers didn't even come out until I was in college. And I'm not that old. I mean, I'm old, but I ain't that old. Right? There were no cell phones. There were no computers. That's why we weren't taught it. Right? Now you got the technology. Now you have access to what all the billionaires have. So now it's an even playing field. And you guys need to capitalize on making money by reading charts and adding the fundamentals. All right. Yep, buying the rumor and selling the news. So I know you guys hear that all the time. Buying the rumor and selling the news. So I had somebody the other day text me and they said, Joe, how come good news came out about this particular stock and the stock went down in price? How come Apple released all of these new products and then all of a sudden the stock went down in price? I said, because you're now learning how advanced traders trade, right? We all know for a fact, every September, Apple's going to release its products. Every September, Apple's going to release its products. What do y'all think happens every September? Every September, I get a message. Joel, I bought Apple. You recommended it. It went down after the products came out. Every year, Apple releases products in September. That's called selling the news. You buy the rumor. You buy the rumor when you hear about them, about the products that you think that are going to come out. Then when the news comes out in September, you sell. This is a trading technique. I don't want you guys to do this as investors. If you're an investor in Apple, What I want you guys to start doing is buy Apple, buy Apple, buy Apple until you have a certain amount of money. And I get a lot of people to say that also. Joe, how do I know how much money to put in a company? And I say it's easy. Like, how much money are you trying to make? Like, a lot of you guys don't reverse engineer your goals. Reverse engineer your goals. What is your goal? If your goal is to make 100% return on Apple, that means for every dollar I put up, I want to make $1. How long is that going to take? I automatically can tell you, oh, it's probably going to take 3 to 5 years. Cass is like, oh my God, Joel, you're a genius. How did you know that? I said, because if you go back and you look at the history of Apple, all you got to do is look at the stock price today and then go and look and see when it was half that price. If it was half that price 3 years ago, then it's probably going to take another 3 years for it to double in price. I can do that in 5 seconds. Most of you guys are like, oh, where do I get this information? All right, couple of places where you can get this information. You can go to Yahoo Finance, right? That's what I use. Yahoo Finance is what my kids use. Yahoo Finance is what I teach all of your kids. You go on Yahoo Finance, you pull up a 1-year chart or a 5-year chart. All right, charts read from left to right, okay? They read from left to right, all right? I forgot the picture is backwards. So they read from left to right. All you got to do is pull up the charts and see what its performance was. I know you guys I know it's hard for you guys to think that way, but remember, Apple is the largest company in the world. So I want you guys to think about this. The larger a company is, the easier it is to predict its movements. Think of it like boats. You got a jet ski, right? If I was James Bond and I was running and I had a jet ski, no, I had a paddle boat, I had a jet ski, I had a bigger boat, and then I had a cruise line. And I had to get away from these cats that's trying to shoot me. I'm going to jump on the jet ski. Why? Because it's unpredictable. The smaller it is, I can go here, there, anywhere. You can't really catch me. I'm not going to get on the cruise line because I'm not going to be able to go anywhere. All right? The bigger a company is, the easier it is to predict its movements. So for you beginners that are trying to find stable companies, you guys need to find the largest companies first. The problem is y'all didn't even know that companies had sizes. Y'all thought that the share price determined how big the company is, and that's not it. A lot of you guys right now swear for cheese, that Amazon is way bigger than Apple because Amazon has a $3,000 share price and Apple has a $100 share price, right? And Microsoft has a share price less than both of them. And it's the second or third largest company on the planet, right? So what you guys need to start doing is you need to see how big it is. The bigger it is, the less money you can make on it, but it's the easiest to predict. So when you guys are building your foundation, you should build your foundation with companies that are stable, that are big, that can't be rocked over, that's like a big cruise line. And then you make your money on the smaller jet ski, wave runner type stocks that can move, but they're unpredictable. And a lot of you guys do the opposite. You put all your money in these unpredictable things like crypto and cannabis stocks, and there's nothing wrong with that, but 10% of your portfolio should be in those types of companies. 90% should be in stable companies. And a lot of people don't realize that when they're talking to me. They're like, Joe, you're just so aggressive. Like, I can't just buy the cryptos. And I'm like, guys, I'm using 10% of my assets for crypto and cannabis. Yes, I'm making a whole bunch of money because I've been doing this for years, and it might be way more than you're used to using. But 90% of my assets are still in boring companies. And I say boring, in companies like Apple and Microsoft and Google and Facebook and Tesla. Tesla is now, guys, a very large company. It's $700 billion in size. Y'all know Tesla is almost $1 trillion in market cap? That's absolutely bananas. 2 years ago, The largest car company on the planet was Toyota. And Toyota's market cap was somewhere around 200 billion. Toyota, 2 years ago. 2 years ago, 3 years ago, some of you guys didn't even know what a Tesla was. Tesla ran right by Toyota and all these other companies and became the largest car company on the planet, 3 times bigger than second place. And they don't even sell the most cars or make the most money, right? Because you guys think that the investment side and the operations of the company are the same. And that's why you're not making money in this market, because you never learn about the size of the company and how much it can grow. That's where you make your money. You don't make your money from the share price. Stop doing it. Don't go buy Shiba instead of buying Cardano, because you can buy I got 1 million coins of Shiba, Joel. If it just go to $1, I'm going to be a millionaire. And I laugh to myself because I used to be the same guy. And I'm laughing, but I'm crying at the same time, because I'm like, they have no idea that it's never going to $1. I don't even want to be the bearer of bad news, because in order for Shiba to go to $1 a coin, its market cap has to be bigger than Bitcoin. I think 10 times over. It ain't happening. Can it happen? Anything can happen. But it ain't happening. So you're buying it for the right reasons, but you're very unrealistic on the expectations of it. And then when you lose money on it, you don't understand why it happened. It happened because you were ignorant to understanding how money works in the stock market. Very fundamental, basic tools, like how big it is and how big it can grow. Shiba is a $40 billion coin. So let's do the numbers. It's 40 billion. So in order for it to go to 400 billion, it'll grow 10 times its value. If it grows 100 times its value, it'll be 4 trillion. Y'all heard what I just said? And a lot of you guys are expecting it to do it because you saw Solana do it. Solana was able to do it, guys, because Solana was small. Solana was a $1 billion crypto that grew 40 times its value. That means, if I had $100 in it, yeah, it can go to 4,000. I think that's the right numbers. Okay? Yeah, because, yeah. So it can happen in something that can grow, but once it gets to 40 billion, it's like a pyramid scheme. Y'all remember pyramid schemes that we did? And y'all understand pyramid schemes. It's like a pyramid scheme. You always want to be the first. If I'm the first person in a pyramid scheme, that means everybody that comes underneath me, I'm going to make money. But at some point, there's too many people. This person got to bring 8 people. This person got to bring 8, this 8, this 8, this 8 in order for you to make money. It gets to the point where there's nobody else to put money into it. It can't grow anymore. It's like a pyramid scheme. Stocks are the most sophisticated pyramid scheme ever created. And when I say that, I can say it because I don't have any licenses, right? Somebody that's licensed can't tell y'all that. It's the most sophisticated pyramid scheme ever created in history. And now that you got governments printing money, that money's going to flow into the stock market and continually making it go bigger. The stock market is rigged to go up. It's a big old pyramid scheme. All right? I said it. It's a big old pyramid scheme. But it's sophisticated and it's legal. It's a legal, sophisticated pyramid scheme created by the wealthy. And when you understand that, you're like, oh, shoot. Joel, you just blew my freaking mind. Yeah, you don't make money off the operations of a company. Apple sold this many phones, therefore the share price should be this. No, that's not how the stock market works. So you can't understand why it's falling. Why is it falling? Is everybody losing phones? No, it's the people taking their money out the market. They're going to put their money back in. The government's going to print $5 trillion. It's going to find its way into the market, and it's going to go higher. And then we're going to go back to this video, and then I'm going to put out my sound bites. Joel said that the market 2 years from now was going to be higher. He's a genius. Take his classes. And I'm telling you guys before it even happens why I'm going to do it and why the business that I have is going to always be in high demand. I'm telling y'all the secrets and the gems because you guys need to understand this. All right. All right. Cool. Hold on. Okay. So a trader was talking about the square of nine, right? Very few traders use this technique. I don't use the technique either, but the square of nine is just a sophisticated way. Oh, hold on. Oh no. Hold on. My computer's acting up. All right. Sorry about that. It's just a sophisticated way of trying to figure out the growth of particular companies and how you invest in the market to try to make your money flip, because the fastest way to $1 million, guys, is not saving $50,000 a year for 20 years. Just me saying that is frustrating. I gotta save $50,000 in order for me to be a millionaire. I gotta save $50,000 a year for 20 years. That's hard. So the fastest way to getting to $1 million, guys, is you got to flip your money. You got to flip $1,000 10 times. That's the fastest way to a million. 1,000. You get into high growth companies. You get into stuff like crypto. You get into stuff that have high growth potential, and you wait for them to grow. I call it the power of 10. I call it 10x. So going back to what I was saying before, how do you know how much money to invest in a company? Well, you go backwards. If I want to make $10,000 turn into $100,000, can I put it into something like Apple? That's the $1 million question, Joel. If I take my 10,000 right now and I put it into Apple, can that $10,000 be worth 100? So then I go backwards and I say, all right, well, that's 10 times its value. So what you're saying is, if you invest in Apple right now at $2 trillion in market cap, your $10,000 will be worth $100,000 one day if Apple goes from $2 trillion in market cap to $20 trillion in market cap. 20 trillion. What's the odds of that happening? Little to none in the next 10 years. Can it happen in the next 100 years? Yeah. Can it happen in the next 10 years? I don't know. In the last 10 years, what did Apple do? I don't think it grew 10 times its value. I don't even think it grew 3 times or 4 times its value. Okay? So you got to go backwards. So how do you find companies that can make your $10,000 grow to 100? Well, I got to find a company that's probably $10 billion in market cap that can go to $100 billion in market cap. I got to find a company. Y'all always ask me, Joe, it's so ridiculous that you're going out there and buying Wingstop and Shake Shack. Why would you buy Wingstop and Shake Shack when you could buy McDonald's and Chipotle? And I just briefly say under my breath, rookie trader. Rookie trader. How big is McDonald's? What you mean, how big is McDonald's? How big is McDonald's? I don't know. Its share price is $200. I'm just throwing that out there. Share price don't tell you how big it is. How big is McDonald's? $300 billion. How big is Wingstop? $5 billion. 5 billion, 300 billion. 5 billion, 300 billion. Which company has the highest growth potential? Potential. In order for McDonald's to double your stock price, it's got to go from 300 billion to 600 billion. That means I need another $300 billion. How many billions do I need to make Wingstop double? 5. You need 360 for McDonald's. You need 5 billion for Wingstop. I know people that got close. Well, I don't know anybody. I know a couple of billionaires, but there are people on this planet that's got $5 billion. There ain't nobody on this planet that's got that can buy the whole McDonald's franchise. There's a couple of people that you don't even know about that can buy all of Wingstop, All of Shake Shack. So when a company is that small, it has growth potential. All right? A lot of you grown adults don't know this. The smaller a company is, the more money you can make on the growth potential. Not the share price. Not the share price. Joel, I just looked up Wingstop. It's $150 a share. I'd rather go buy something that's smaller. Rookie trader. Because you're looking at the wrong thing. I told you guys to buy Shopify. Shopify's $1,000. I told you to buy Mercado Libre. It's $1,000 a share, Joel. Well, then you just missed out on what, a 50 or 100% return in the last year? Because you got caught up in share price. You could have bought $100 worth of Mercado Libre. You could have bought $100 worth of Shopify. And you would have earned a serious amount of money, right? So you guys got to go backwards. How do you know how much money you want to put in? Well, how much money are you putting in? And how much money do you want that to grow to? Okay? My number is $10,000. I like to put $10,000 into something, and then that's the maximum amount that I put in. Why? Because 10x is what I think of. Anything that I put my money into, I'm thinking 10 times. 10x. My dollar is going to be worth $10 in the future. Why? Because the company has growth potential. The government's printing money. It's going to grow 10 times its value. The cost of everything is going to cost 10 times its value. I never thought in a million years that a pickup truck was going to cost $100,000. That I got to order on a pickup truck that's $70,000. I never thought in a million years I would pay $70,000 for a pickup truck. A pickup truck. That's how much a Bentley or a Rolls Royce used to cost back in the day. I never thought in a million years I would pay that amount of money for a vehicle. Well, I can pay that amount not only because I have it, it's because everything around you is going up in value. Like everything. I never thought in a million years I would order Uber Eats every other day and spend $100 on a meal. On one meal. $100. I never thought in a million years I would do that. But it's happening because everything around you is going up in value. And if you're not invested in the stock market, you can't keep up with the Harrisons. You're going to get left behind because you're so fearful of making money that you put your money in a savings account. You ain't earning nothing off that money. And I get it. You put it in real estate. Well, guys, real estate only go up 10 to 20% a year. You should own the real estate and you should own stocks. You don't need to put all of it in. You guys are so all or nothing. All or nothing. Joel, I got to put all of it in it or nothing. Should I buy real estate or should I buy stocks? You should be doing both. Buy what you're comfortable with real estate wise. If it's the house that you live in, great. Buy what you're comfortable in for stocks. Right? Put down a number. What are you comfortable investing? I promise y'all, 100% of the time, 1 year later, if you don't believe me, write down this date, buy something. Go a year later. You always say, Joel, I wish I put more money in. I just wish we could go back a year and I put more money in Bitcoin. I wish I would have put more money in Apple and Microsoft and Google and Facebook. All the companies you use every day, the McDonald's and the Nikes. I don't understand how they all went up in value during a pandemic when everybody was out of work. Because you don't understand how the wealthy think. The wealthy and the rich and all of these companies that are out there don't give a damn about you and your family. Amazon going to be around no matter what happens. McDonald's is going to be around no matter what happens. Hilton, you know, like the Hiltons and the Marriotts, they're going to be around even if nobody goes to their hotel chains. Why? Because they're now a part of the staples. They're too big to fail. They can withstand this. This isn't the first time they've gone through this. This ain't the first time. They went through it in 2008. They went through it in 2000. They know what to do. Y'all are just now figuring out what to do. All right? All right. It's 12 o'clock. I got to start getting over the charts with Joe. Let me see if I can answer the rest of these questions quickly. All right. You compare the stocks to their sector base of market cap to see where it can go, correct? Yes. Where do you usually go to find what sector a stock is in to compare? All right, so if you pull up Yahoo Finance and you type in Nike, you're gonna see a whole bunch of companies underneath it that are similar to it. So if you're like, what companies are similar to Nike? I automatically know, oh, the Under Armours, the Lululemons, they're all similar to Nike. Everybody's buying Lululemon now because Lululemon's growth rate is really, really high, and they're comparing it to Nike now. So if you're looking at one of the fastest growing retail companies, it's Lululemon. All right. Under Armour used to be that company, but they got to figure some things out. So you got to also Google, like Google, Google is there, for questions. What companies are similar to my stock? And it will show you those companies. And then you go on Yahoo Finance to see if those stocks are publicly traded, because you can't invest in every company that you can see. You can only invest in the companies that are publicly traded. And that will give you an idea of how big it can grow. All right. I always give the example of Square, PayPal, and Visa. How did I know that Square was going to make you guys a killing? Because fintech is where everybody on this call should own a fintech company. If you don't, you ain't trying to make money. You just ain't. You got to own a Square, a PayPal, or a Visa. Pick one of the three, put it in your portfolio. All right. But Visa is the largest. PayPal is the second largest. Square is the smallest. Square is the smallest, and it's got the highest beta. It has the highest growth potential. PayPal, which was created by Elon Musk that created Tesla and SpaceX. I know a lot of you guys didn't know that. Elon Musk invented PayPal, right? Anyway, it has a higher growth potential than Visa, right? So Visa, I would put in my boring stock account, investment account as my foundation. PayPal and Square would be those companies I put 10,000 in, expecting it to grow 5 or 10 times its value. Okay. All right. Thoughts on investing in the metaverse. All right. So the metaverse is something that everybody's talking about now. And guys, I ain't even gonna lie. A year ago during the pandemic, I bought my kids for the first time at Christmas a virtual reality set. So I bought an Oculus set. Look, for Christmas, if you got kids, buy them an Oculus set. It's the craziest thing. Like we've been looking at virtual reality for a while. So, people are like, Joel, virtual reality is virtual reality. It's been around forever. No, guys, I don't know what happened in the last 3 or 4 years, but virtual reality is on another level now. Like, it's so real that some people can't even watch it because you get motion sick. Anyway, the metaverse is the craziest thing that happened. True story. I was playing this game. So I get into this game. And in this game, you're like, it's the first time I ever felt like you don't even have to go. Like, if y'all ever wanted to know how it felt to be in a weightless environment, go play some of these virtual reality games. So I'm playing this game where I'm in a weightless environment. So I'm walking through the place and I'm pulling myself through the area. And I'm like, yo, this is the craziest thing I've ever felt. I lie to you not. I hear somebody talk through my microphone. And I'm like, what the heck is that? I turn to my right. It's another individual that's like, hey, how are you doing? Should I show you around? And it scared the heck out of me. Because I was like, yo, I'm in this thing thinking that I'm by myself. And I look to my right and left, and then all of a sudden it's different individuals talking and doing the same thing. And then they're like, hey guys, let's go over into this other room. And what we're going to do is we're going to crash some things and talk some crap before we go play this game. So then I go into that room with them. They're showing me how to hit this thing and throw these frisbee type things. And then they're like, all right, in 15 minutes, we don't know each other. We're going to go and play this game where we're flying through the area and we're throwing something like a football, and we got to throw it into this gold thing or whatever. So we're playing the game, and I'm sitting there tripping because I'm in this weightless environment, feeling weightless, and I'm going through the air, and I'm communicating and interacting with these other individuals. But it was the metaverse, and I was like, guys, I already know what's about to happen. Once these actors and actresses and entertainers get a hold of this, there's probably going to be metaverse concerts where you can go to a concert with whatever look that you want and literally be sitting at the concert in a chair watching something on a virtual screen and it still feel real. It's the craziest thing I've ever experienced in my life. So I told everybody, if you want a hint at what's about to happen in the future, this metaverse, you guys need to go and pick up an Oculus. Why? Because Oculus is owned by Facebook. So what I think that's about to happen is Facebook is about to come out with all of these groups and rooms where y'all see how I'm doing this. I'm going to be able to teach y'all in a metaverse environment where we're going to be able to communicate with each other, which is going to be the craziest thing ever, but that's the future. So I know I'm all excited, but it's because once I got into that metaverse and I saw how people interacted in it, it like blew my mind. Like you're literally going to be able to be at the Super Bowl, on the Super Bowl sidelines, watching the game from the sidelines through a headset, and you're gonna feel like you're there. It's the craziest thing. They can connect real with fake, and they can have the unreal in the same environment. It's like the weirdest thing in the world. But anyway, as far as investing in it, Facebook owns Oculus, so you should own a lot of Facebook. Guys, you should be loading your portfolios with NVIDIA. NVIDIA has been one of my number one semiconductor companies. Why? Semiconductor companies are the heart of all technology. And they have the fastest processor, and there's just nobody that can compete with NVIDIA, right? So NVIDIA is in electric cars. So the way that cars are going to be able to communicate with each other on the road. So for those that don't own, and that's why I'm so big on Teslas and electric vehicles. If you guys haven't driven one before, that's probably why you haven't seen the passion that I have. These cars are not cars anymore. They're computers on wheels. And what they're doing is like Teslas are interacting with other Teslas while they're on the road. Like you don't ever hear about a Tesla hitting another Tesla, ever, right? Because they're communicating with each other. They know the distance that they are from one another. The car does things for you. Like you could be falling asleep and then you hit the lane and then it turns and puts you on the right path on its own. Like there's so many different things that the car does that the average car just can't do. But companies like Microsoft, Disney, Roblox is also. So your kids right now are learning about the metaverse firsthand. So, and they're doing it through Roblox. So they're building all of these different worlds and they're learning how this new world works. So follow your kids, listen to what they're talking about, and start investing in those companies that they're really excited about, because these are going to be the companies of the future. I've been building a pretty decent position in Roblox as well. But it looks like, hopefully I'm still on. All right, thanks for the feedback. Getting $1 million worth of game for free. All right, where can you find my index? Oh, yeah, somebody said we virtually going to be able to go to the clubs. Yep, you sure are. Watch yourself, though. If you guys watched Player One, Player One is a really good movie that's going to give you an idea of kind of how the metaverse will be. Probably with, I ain't even, like, I think we're already there. I would give us probably maybe 2 or 3 years before we have environments like Player One. All right, cool, guys. All right, that was enough questions. I'm going to have to get on out of here. I know this was about shorting, but today I'm going to only talk about, if you go over the charts with Joel and give me to 1230, if you go over the charts with Joel, any stock that you guys give me today, I'm going to show you how you could have made money on it going down in value. It's going to be a special session on shorting the market or buying puts on the market. And you guys can give me the stocks that you want me to analyze. And I'll analyze some stocks to the upside as well. But the main focus is going to be on making money to the downside. All right. So I'm coming to you guys from Decatur, where it's greater. I'm out of here, and I will see you soon. Peace.